This platform, that's really good. That was really good. I'm impressed. That was really good. That's in the chat. Wow. So momentum strategy, right? And then now I'm going to ask you guys one more question, right? I would like one of you guys to literally like explain the exact way that we trade. Can one of you guys answer like the strategy that we use? Like, should take you guys listen on me to explain.
We start with the market structure to see the bias of the market.
I want all the time frames, everything. Like,
okay, we'll start from the daily, sometimes week, maybe week, but the stuff we did.
So we start from the monthly.
Okay, I want one at a time. Okay.
So we start with the monthly, and then we look for the supply and demand levels, and then we scale down to the weekly, where we look for the market structure, where the direction of the market is headed, like whether it's an uptrend or downtrend.
All right.
And then you scale to the daily and make sure like it matches with the weekly. And then once you're in the daily, like that's where you draw your market structure, like the higher high, higher lows. And then like once you like insert everything in the daily, you scale down to the 4 hour to see the before you go to the 4 hour, you draw your Fibonacci.
Okay.
Yeah, and then like once the market retraces to between the 50 and the 61.8%, that's where you scale to the 4 hour and see before you do that, like, you draw let me say like a support or resistance, like whether it's like an uptrend or downtrend, and like you see like how many touches it does, like in between the 50 and the 61.8%.
Are you still on the daily or are you on the 4 hour now?
And now I'm still on the daily.
Okay.
Yeah.
Okay,
and then like once you go on the 4 hour, like between those two levels, you see like you look for something like a bullish engulfing to see like where it's going.
Wow. All right, I'm impressed. Keep going.
Yeah, and then like once you're done with the bullish engulfing and you know the direction, or bearish engulfing when it's like a downtrend, you go to the 1 hour, where you draw, like let me say it's an uptrend. You draw like a trend line, when like a bearish trend line, to see like where like the market crosses the line and retested it, and then you can make an entry.
Okay, so what do you look? You're almost there. You're like 95% there. On the 1 hour time frame, what do you need to see if you're looking for a buy, for it to happen, for you to actually get your entry price on the 1 hour time frame?
So it needs to like when it's a buy.
If you're looking for, obviously on the daily, as if you're looking for a buy and so on, you scale down to the 1 hour. You said you're going to draw your bearish downtrend, which is really good. So then you're looking for the entry price. So what do you need to see on the 1 hour time frame to be like, okay, this is it? And is this something which I should have done on the GBP and ZD trade, and then we actually ended up losing it? That's one confluence I didn't wait for it.
So I need to wait for like to break the trend line and make a retest.
Retest and then to give you a what?
Retracement. Like to give me
Previous rate.
Well, that's going. This platform. That was really good. That was really good. I'm impressed. That was really good. So that's pretty much how we trade, guys. That's pretty much how we trade. And I'm going to show it to you guys. I'm probably going to go over GBP and ZD. I'll also be going over Euro USD. I'll show you exactly how we trade every single time. And then again, I'll be implementing new stuff probably in the next couple of months to even give us a better edge, right? So the way we trade, we mainly swing trade. Swing trade is we don't do in and out, right? If I call a signal, if I take a trade myself, we're at least probably going to hold it for a few days, right? That's the way we trade. So one thing that Ron mentioned as well is that if you trade on the lower time frames, there's absolutely nothing wrong with it at all, right? But just know that you won't be able to see the bigger picture of the overall market, right? You might see a lot of noises, and it's easier to lose a lot of trades when you trade on the 1 minute, the 5 minutes, or the 15 minutes time frame, right? Because a higher low. Let me do it this way, right? Let's see if you're trading on the 5 minutes time frame. TF, right?
Show them on the chart, they'll know right away.
Yeah, I'll show you after. So let's say this is your support on the 5 minutes time frame. If you're looking for a buy, support, just basic stuff, right? Obviously, we don't just like buy at support or sell at resistance. That's all I'm saying, right? let's say if you're looking for a buy on the 5 minute time frame, the market might just go up and dump on you all the way. Because the 5 minute time frame is literally nothing, like straight trash. It's not strong enough for you to look for a buy or a sell. But let's say now if you go to the daily on the 4 hour time frame, right? If you see a support level on the daily or the 4 hour time frame, and obviously you get all the other consequences that I mentioned, right? You'd feel much more comfortable buying on a daily support or a 4 hour support compared to a 5 minute support, because you gotta realize on the daily, right? For once, the support is going to be at least 5 times stronger compared to the 5 minute time frame, right? Which means that there are more buyers, right? People looking for buys on the daily and the 4 hour time frame.
It was tested a couple of times.
Exactly, you're going to see more reactions. The more reactions you see, the better as well, right? What I'm saying is you can easily place a buy on a daily time frame. There's a higher chance for the market to go and smash your TP compared to a 5 minutes time frame, right? Because 5 minutes time frame moves like crazy, right? The 5 minute time can easily create a support within 5 minutes, right? You gotta realize the support, it's gonna take a whole day for the support to be created on a daily. A huge difference, right? I'm not saying you're not going to make any money when it comes to the 1 minute, 5 minutes time frame, right? I'm sure there's some scalpers out there, they probably make a lot of money, but they also lose a lot of money. I want you guys to realize something, right? I'm sure we all have a phone bill, right? Every month, you have to pay, right? When it comes to trading, guys, you have to be able to make money consistently. That's the thing, right? You can literally start trading today and make a lot of money today, but can you do it the next day? Can you do it next month? Can you do it next year? And so on and so on and so on and so on, right? Because if you're trying to trade full time, if you're trying to go full time, you must have a system, right, that can allow you to make money consistently. I'm not saying you're not going to lose money. That's not what I'm saying. You can easily have a bad week, but have a good month, right? So, time for some TAs now. All right. So, the strategy we use is very simple, right? You can literally work 12 hours, 14 hours in one day, and still be able to use the strategy and go to work and not worry about your setup, right? And also, as long as you have your stop loss in place, your TP in place, as long as you know what you're risking. And like I always tell people, if you get into trading and you start stressing, it means you actually over leveraging it and you're risking way more than what you're supposed to risk, right? For example, let's say if you have 10K in your account, if you lose 20, if you're risking $20, are you going to lose sleep over it, right? Probably not. You know what I'm saying? But if you have 10K in your account, if you're risking 2K, 3K off of one trade, then you're going to be like 2, 3 a.m. you'll be checking your phone and so on and so on and so on, right? So the easiest way to actually not stress when it comes to trading, guys, and I'm telling you, is by using a proper lot size, and is also by knowing how much you're risking, how much is where your stop loss is currently at, right? Most of you guys work 9 to 5. You guys have you guys have to go to work, right? So let's say if you place a trade, let's say if you have 1K in your account, if you place a trade and you're only risking $25, it doesn't matter if stop loss 8 or TP 8, you're not going to be worried as much as if you're risking like $200-300 on that trade, right? So this is why risk management is very important, very, very important, right? So we're currently looking at the monthly time frame right now, right? I don't be doing too much on the monthly time frame apart placing my key supply and demand level, right? The supply level is like a resistance level, but you have way more touches, right? Because for you to get a resistance level, you only need 2 touches or more. It'll be like a resistance level. So it's the same thing as support. But once you get like, especially on the monthly and weekly and the daily time frame, we actually call these supply and demand because we have, it's based on the monthly, weekly, and daily, and we have a lot of touches there, right? Let's say if you have like 5-10 touches at a zone, right? That zone can be a demand or a supply level, right? The mid level means there's a lot of buyers there. Supply level means there are a lot of sellers there, right? So it's very easy, right? So grab your, I use MT5. I've never used TradingView before. I'm very old school, but just grab your low line, right? Place your support, right? As you can see, right? We have a little touches. If you zoom in a little bit, right? We have 1, 2, 3, 4, 5, 6, and that is the monthly level, by the way, guys, right? So monthly level, like the monthly time frame. Sorry, monthly time frame, not level. Monthly time frame. If the market goes for a monthly time frame, a monthly support, it is definitely going to react. Right? If it goes for compare if it goes for a minute or 15 minutes, a support or resistance level, can easily break that support resistance level because it was based on the 15 minutes time frame, right? On the monthly time frame, you have a lot of sellers, a lot of buyers there, right? So that is your resistance level, right? So you're going to do the same thing for your demand level as well, right? Very easy, right? You got 1, 2, 3, 4, 5. That's literally all you have to do. As you can see, right, EU pretty much been bouncing between 1.17809 and 1.13930. Very, very simple on a monthly time frame, right? You guys are all good. It's all making sense now, right? Yeah. So now, scale down to the weekly time frame, right? If you zoom all the way out, we got this, right? Zoom all the way in, right? The support that you place on the monthly is still going to be valid on the weekly, right? It's not like you have to place monthly support, weekly support, daily support. No, just place your key supply and demand zone on the monthly and you're done, right? Obviously you can, add more levels and so on, but that's not what we look for on the weekly time frame, right? Can one of you guys tell me what we look for on the weekly time frame? Carter, you out, you also. Which again, now you already explained the entire strategy, so you also out.
It's
right?
more clear picture about what's going on. Like, you can tell
Going
more.
up or down?
Where is the resistance
trend.
line?
So say it again.
You're looking for the trend, whether you're
The
bullish
trend.
or bearish.
Right, so what trend? Overall trend or the current trend? There's two different trends, right?
I would say the overall trend.
Overall trend, right? So guys, you go to the weekly time frame, literally all you have to do is, and I'm telling you, by just doing this, you're already above 90% of the retail traders, trust me. Right? By just knowing the market is bullish and bearish, you're already way above everybody else, right? So in the weekly time frame, all you have to do is zoom out, right? So as you guys can clearly see, is a uptrend, right? So perfect, right? So weekly is done, so now you got to scale to the daily time frame now. Sorry. Scale on daily time frame. Let me move this a little bit. There we go. So on the daily time frame, what's the first thing that you got to do on the daily time frame?
Market structure.
Make sure it
Yeah.
matches the weekly.
Thank you very much, right? So the daily time frame has to match the weekly time
Same.
frame, right? As you can see, it is also in an uptrend, right? So now you know the weekly is bullish, and now you know the daily is bullish, right? So the way the strategy works, right? It's the name of the strategy is called momentum trading, right? The way the strategy works is we are making sure that the 1 hour, the 4 hour, the daily, and the weekly, they're all in the same trend, right? If everything is bullish from the 1 hour to the weekly time frame, and then you get and you place an entry for a buy, there's a great chance. I don't like saying chance because it's like gambling. Let's say probability that the market will go your way, right? We're just making sure everything aligns correctly, right? So on a daily time frame, we know the daily is bullish, the weekly is bullish, and that's why EU took off like that. You know what I mean? Shout out to Zay again, right? So now we are on a daily time frame. We know the daily is bullish, we know the weekly is bullish. What's next?
4 hours.
Hmm?
Then you wanna go to 4 hour?
Before you go to 4 hours, there's something that you gotta do, right?
You gotta find your higher highs and higher lows.
Higher highs and higher lows. Thank you very much. And can you guys tell me, right? So I'm not even gonna ask you guys a question. I'm not even gonna ask you that question, right? But before you do all that, right, it is always good to look on the left side of things, right?
Mm.
So as you can see on the left, the market was bearish on a daily, right? We gotta go trend, right? Do something like this, right? It was bearish on a daily, right? So now it is no longer bearish on a daily time frame, it is bullish, right? So now all you gotta do is, right? Where would you start placing your key structures?
From support to resistance.
Support is, because okay, this is where you're at right now, right here.
So you do a trend line, so it break.
You see right here, right?
Yeah.
You sure?
Yeah, cause you're doing the next
Is that
trend.
the lowest low you see?
Oh, okay, sorry.
There you go. Thank you. Right? So now all you gotta do is go to insert objects, right? Shapes, rectangle boxes, right? Obviously we know the market is no longer bearish on a daily. You guys can clearly see the thing is I hate drawing lines, right? Because you guys gotta realize, right? When you draw a line, it's kind of you saying, it's kind of you telling the market to respect it. The market does not care about your line. You know what I mean? So and that's why we focus on market structure, because the market creates structure. We don't create structure. If that makes sense, right? But if you see people drawing crazy support and resistance levels, right? The market can easily breaks those support and resistance levels, as you guys can see on the GN trade, right? So all you need to do is, right, go to insert objects, right, go to shapes, and then grab the rectangle boxes, right? Start placing your low, right? Grab a high, and then what would you guys call this right here? High low, right? And then let me zoom in to show you guys something real quick, right? What would you guys call this? Is this structure? Is this a higher low?
No, I would call it.
And then why wouldn't you call that a higher low?
Again, it's kind of choppy, it's small, so I would bring
It's higher than previous low.
at top to come down to make it connect.
Okay, but there's a reason why this is not classified as a higher low. Carter, you gave this answer, yeah?
Oh, I'm allowed to now?
Yeah.
Well, there's no 50 or 60%.
There we go. The easiest way to tell if it is a proper higher low or a lower high, right, is by using the Fibonacci retracement level, right? So let me show you guys something real quick. All right, if you go to insert objects again, you gotta go fib. You go from this low to this high, right? As you guys can see, the market dropped to the 61% level, right? Even below it, it went for the 70.6% level. And this is what we call liquidity sweep, right? But yet again, we probably would have still. I'm pretty sure I called that U trade a couple months ago and actually made money from it, right? The reason we probably would have not gotten liquidated off that sweep is because we don't just buy at the 61% level or the 50% level, right? You always gotta wait for the market to lose momentum, right? As you guys can see here, sellers are in control, sellers are in control. Even at the 61% level, sellers were still in control, right? So you cannot just buy as soon as the market goes for the 61% level. Oh, okay, I'm going to buy. No, you need to wait for sellers to lose momentum, and you need to wait for buyers to start getting momentum, right? Very important, guys.
Wait, let me see where you put your 0%.
Should I say it again?
Can I see where you put your 0%?
0%?
Yeah, on the Fibonacci.
So yeah, so if you're looking for a buy, I'm going to do it again for you real quick, right? Go to insert, objects, fib, retracement, this is from the low to the high, right? That's 100%, 0%, and then the zones you'll be looking to place the buy are going to be between the 50 and the 61% level, right? But that doesn't mean as soon as it goes for the 50 or 61% level, you place your buy or sell. It's too easy, right? It doesn't work like that, right? There are so many confluences that go into the strategy, right? So, and now I'm going to show you guys why this was not a higher low, right? Like Carter said, right? If you grab your fib again, right? If you place it, now you're going to place it from the most recent higher low. Let's say if you thought this was a higher high, you place it from this to that, and guess what? Did you get a 50 or 61% level?
No.
So it is not a higher low, right? So now you cannot place the fib from this to that. Where would you place the fib next?
From the bottom to the top.
Thank you very much, right? Go again. You guys are doing really good, I like that, right? Place this, now this is the higher high, right? So now people would have lost, and this is why I've been telling you guys, right? I know some of you guys love counter trading, right? You will make money from counter trading, but you lose a lot more from counter trading. Believe me, because I've done it for 2 years straight, right? So let's say you'll be like, you know what? I made money from the higher low. You know, this is why I don't buy to sell to buy. I don't do none of that gibberish stuff, right? So let's say if you made money from the higher low, you smash TP, right? TP at the 0%. This is going to be your entry price. This is going to be your exit price at the 0%. And then as soon as you see the market retracing, you're going to place your sell, thinking, hey, the market is going to retrace, right? I'm going to sell to buy. Some of you guys still do it, which is, you know, I'll just be watching you guys, right? Let's say if you say, you know what, the market is going to retrace, to this 61% level for me to buy it again. You go to place to sell, you'll be in profit, and you go to sleep, and by the time you wake up, your stop loss you out, right? The reason your stop loss got hit is because you're going against the market, you're going against the trend. Let me put it this way for you guys, right? All of us here sitting combined, right? We do not have enough capital for us to place a sell in an uptrend for the market to start selling, right? Imagine you have 1K in your account and you're calculating enough to place a sell in a heavy uptrend from, you know, the weekly is an uptrend, you know the day is an uptrend, and you're going to place a sell thinking, hey, because you guys gotta realize once you place a buy or a sell, that's you expecting the market to go up, right? For you to make money. Once you place a sell, that's you expecting the market to go down for you to make money. You know what I'm saying? So once you place a sell in a heavy uptrend, that's you telling the market to go down for you to make money. And I'm here to tell you, you cannot move the market. I cannot move it. All of us sitting here cannot move it, right? And this is why the easiest way to make money when it comes to trading, guys, is by trading with the market, not against it. That's the easiest. That's the only way you can make money long term, right? This is why most people, they just buy and hold. You know what I'm saying? You can't lose if you buy and hold. If you buy real assets and you hold it, you might be in drawdown for 2 years, 3 years, but 10 years, you'll be in profit.
Can I add something to that?
Yeah, go ahead.
Can you zoom out so we can see more of the chart?
Yeah.
Not so much, just so right there. So another thing that you guys can do, right, is see where that higher high is, right? That's actually a support zone. So if you were to look to the left, you could stretch that rectangle box all the way to the left, and it'll give you that zone, right? Do you see where the new lower high is? So not the lower low, but the one right above it. That's another support zone, right? So you have that support zone that goes all the way across there. And then you have where the 78.6% is.
Yeah.
You can bring that, and it's showing you another support zone.
Yeah.
So that's when we say, like, you'll see Zay mark a chart and he'll run his box all the way to the left. It gives you that other confluence that, you know what, it's respecting the zone. It's respecting the 71.8. It's respecting the, you know, the TP where you have. It shows when we say look to the left,
yeah.
This is where we're saying, is it supporting that zone? Because then you're gonna go, it's touched that zone. So now that we see it in uptrend, what you can look at is it gonna touch that zone and then go back down? Is it respecting that, or is it breaking it? Right? And the same way the opposite, right? That's how we know if it's breaking its own trend or it's respecting its previous trend.
Very valid, right? Like I mentioned, guys, it's always good to look on the left side, right? And Zay loves looking on the left side to see the previous structures, the previous lower lows and lower highs, and so on and so on and so on. Like me, I kind of know it automatically, but for you guys, it's always good to actually look on the left side to see what happened, right? And like I said, guys, yet again, right? Do not be fooled by all these guys, you know, posting screenshots, scalping, and all that stuff. You make a lot of money from scalping, you lose a lot of money from scalping as well, right? The goal is to make money consistently. That's the key word, consistent.
Can you show them the difference between, because we're on the daily, can you show them the difference of how much in one rectangle box it would show on the 1 minute to 5 minute, the difference, why scalping is so dangerous?
Yeah, absolutely, because you see this right here, that one rectangle box, and the market is going up, smash your TP at the 0%, you'll see like literally like at least close to like 60 high lows and high highs and so on inside of this little thing right here, right? I'm going to show it to you guys after, right? But when it comes to trading, guys, I want you guys to have the right mindset, right? I want you guys to trade with the market and not against it. It's very important, man. I'm telling you, just by sticking to that one confirmation, right? It is going to take your trading to the next level, right? Counter trading, you make a lot of money from counter trading, but you lose a lot more. I'm not just saying that just to say it, right? I have data to prove it. If I go back from when I started my trading journey from 2020 to 2022, I had a negative P&L from counter trading. But I'm saying you can do it for 2 years and see what, and then come back to me and tell me what happens. right? So,
And-
and again, you going against you placing a sell in the uptrend is you telling the market that, hey, I have a lot of capital for me to say sell for you to go down. It doesn't work like that. You know what I mean? The easiest way, the only way, for me at least, for you to actually, stay in profit, have a big positive P&L long term, is to actually trade with what the market is doing. You know what I'm saying? Yes, it might seem boring and so on, but that's what's going to keep you in the game for a long period of time, 5 years, 10 years from now. And if you're trying to go full time or even become a professional trader as well, that's what's going to keep you guys in the game for a long period of time, right? I'm not saying that. I'm not saying you're not going to make money from counter trading, right? I'm just saying it is very risky and you're going to lose money. And I just showed you guys an example just now, right? Just by selling here, thinking that you're going to sell to buy at the 6.1% level, right? And one thing I gotta mention to you guys as well, right? You cannot time the retracement. You get what I'm saying? You cannot sell to buy, because when you're selling to buy, that's you timing the retracement as in like where the market is going to sell to. You can't do it. You know what I mean? You just cannot time it, right? The only thing you can do is to react to it, right? To react to the retracement. That's why you have the 50% and the 61% level. Once the market comes to you and all your confluences align, then you're going to react to it, right? Remember what I said previously, right? When it comes to trading, guys, you need a lot of data for you to make the right decision, right? So you selling to buy is you timing the retracement. It's you predicting where the market is going to stop for you to buy, right? If it was that easy, man, we'd all be millionaires right now. You know what I mean? But it's really not that easy, right? So the best thing you can do is, if you have a specific area that you're looking for the market to retrace to, right? You wait for the market to come to those areas, and then you go scale down to the 4 hour, to the 1 hour for you to get your entry price by, adding all the other confluences, right? I'm telling you guys, the strategy does work, right? But you have to be extremely patient, right? Extremely patient. And that's why we try to trade 2 to 3 times per week. And even if the strategy does work, you're still going to lose money. You know what I mean? Imagine you're counter trading, right? We know sometimes the market will trace to the 6.1% level, you have all the confluences, and you still lose, right? And that's why we have run for risk management, right? When you do lose, you lose 50 pips. When you do win, you win 150 pips. Which means if you take 4 trades in 1 week, even if you lose 3 trades out of 4, you only need 1 to be at break even, right? As trading, you need a system, right? You need a system to make money consistently. It's not just TAs, it's not just fundamental analysis, it's not just risk management, it's everything combined. That makes sense, right? And that's the mindset I want you guys to have when it comes to trading, right? You do not need to be following all, because you guys got to realize, right? A quick Google search will show you 97% of retail traders lose money. They don't make money consistently. So somebody got to be lying. You know what I mean? So everybody's profitable online.
And can I add one thing?
Yeah.
That's the reason why we only focus on 3 or 4 different pairs. We are not looking at every single pair, because when you focus on a certain pair, you learn how it behaves, right? So if you guys are going to decide to trade on your own, whatever you guys want to trade, study that. If it's gold, study it. Learn it like it's your girlfriend or boyfriend, right? You know when they're hungry because they behave a certain way. Or, you know what I mean? Like, you're going to be able to look and go, oh, it's acting weird because by back testing it, you know how it behaves, right?
Yeah.
So that's why when we say we're only trading certain pairs, that's because we can focus on those pairs. And the reason why you focus on 2 or 3 pairs is because when one's setting up, another one might be ready to trade. So it's not like you're waiting just on that one pair, and let's say you missed that entry, now you got to wait for it to retrace and redo what it needs to do. But you're still also looking at 2 or 3 other pairs, so that you're still in the game.
Thanks. So the next thing to do here, as you guys can see, you have your low, high, higher low, and higher high, right? So now you're going to grab your fib again, right? And then you're going to place it from the most recent higher low to the most recent higher high. And remember, guys, this was a monthly resistance, right? what did I tell you guys when I was placing my key supply and demand on a monthly time frame? That's something I did. That's something that I told you guys.
Respect it.
It is going to react to it.
Yeah.
You know what I'm saying? You see why the market reacted to the monthly time frame and dump? And people be like, oh, your USD is melting. There's a reason why it is melting. It's not, first of all, it's not melting. It is retracing. You know, I always be correcting you guys in the chat sometimes. I'm like, hey, it's not, gold's not melting. Gold's retracing. Big difference, right? So that's the monthly time frame. That's a monthly support resistance level. That's a monthly resistance level. That's a monthly support level, right? If the market drops all the way to the monthly resistance level, it is going to react to it because it is a monthly support. If this was like a 15 minutes or 5 minutes, even 30 minutes resistance level, the market could have easily just literally, let me show you guys something like this, right? Could just do something like this, easy. There's 5 minutes, you know what I mean? There's not enough data on the 5
Can you go back to the weekly?
Say it again?
Can you go back to the weekly? And then on the monthly? So the biggest thing that you gotta see is this also, especially for gold and Bitcoin, it's previously had a higher high. So there is a chance that that could break that resistance on the monthly, because it's shown that that's the support and resistance, but it can break that and go higher. Doesn't mean that it will, so it could go either way, guys.
Yeah, it should technically break it, and the reason I'm saying the market is never going to break. The market is never going to break a monthly resistance just like that, right? It's going to give you the higher high, as you guys can see, and it's going to retrace because he has to react to it, right? It's going to retrace, and you only have one job and one job only, guys, right? Trust me when I say this. I do not care about the sales. I do not care about what sellers are doing, because for all we know, right here, could have easily kind of like retraced a little bit, not even close to the 38.2%, just retrace, and just like take off again. You know what I'm saying? I do not care about, your USD is selling, let me place a sell. You know, I mean, that's not what trading is about, guys, right? You have listen, I can easily share with you guys my history. I take all my trades the exact same way. Literally the exact same way. Right? You don't see me counter trading. You don't see me using like different strategy, different tools, different lots. I take my trades the exact same way. That's why it's so easy for me to pass a challenge like that or to have a positive P&L. Right? That doesn't mean I don't take losses. I take losses. I lost GM twice in a row. Right? I take losses all the time. But guess what? The only thing we didn't do on GM properly was because GM didn't break the 1 hour trend. I'll just go into that in a minute. What I'm saying is, you must have a system where you'll be taking every trade the exact same way, because if you following the strategy that we are teaching you guys and also counter trading, it will take you like 10 years to be profitable, right? Compared to like, it could have taken you guys 1 year, right? Just make sure you take the trades the exact same way, right? If you know the market is bullish on the weekly and daily time frame, you look for buys only. If the market is bearish on the weekly and daily time frame, you look for sales only. That's it, right? So now the next step is to grab your fib again, right? Place it from the most recent higher low to the most recent higher high, right? So now, as you can see, the market dropped all the way to the 61% again, right? 50% and 61% again. And guess what happened? Another liquidity sweep, right? But most of the time, that trade we made money off that trade for sure, but you know, you do not just place the buy at the 61% level. You need to wait yet again for buyers to kick in, buyers to come in, right? As you guys can see, you cannot really see buyers and sellers fighting on a daily time frame. On a daily time frame, what you need to do is place your key structures, higher lows, and higher highs in the fib. That's it. And then now you're going to scale on the 4 and the 1 hour time frame. Now you're going to properly see bears and bulls fighting, right? So now I'm done with the daily time frame, right? I'm not sure what the entry price at called. They're probably somewhere around this area. Right, so now I'm going to scale. I'm going to remove the fib now. Right? I'm done with the daily. The daily, you look for the overall trend. The daily, you place your key structures. The daily, you place the fib. Right? So you'll spend a lot of time on a daily time frame. 90% of your TAs will be based on a daily time frame, right? So now, right, I'm going to scale down to the 4-hour time frame to see the bears and the bulls fighting, right? Now, as you guys can see on the 4-hour time frame, sellers are in control, buyers are coming in. We're still not interested because it's not at the 6-1. That's what I'm saying. You need to have a specific level that you are looking to get in, an exit price, an entry price, and an exit price, right? I'm not getting in here. I'm not getting in here. I'm not getting in there. None of that. I do not care, right? And as you guys can see on the 4-hour time frame, the market was creating small lower lows and small lower highs, right? But on the back end, I already know the daily is, right? If we go back on the daily time frame, I already know the daily is creating higher lows and higher highs. I'm not interested about the lower lows and lower highs on the 4-hour and the 1-hour time frame. I already know I'm looking for a buy on the daily, right? So now I'm going to scale down on the 4-hour time frame. On the 4-hour time frame, right? If you're looking for a buy, can you tell me what kind of confluence you'd be looking for on the 4-hour time frame?
It's doing a lower low and lower high. I would draw a trend line. Trend line to see where it breaks above the trend line.
I would say like a bullish engulfment.
Yeah. So what you said is right, but that's for the 1-hour time frame, right? On the 4-hour time frame, you look for, if you're looking for a buy, you're going to look for sellers to stop selling, and you're going to look for buyers to start buying. If that makes sense, right? So let me do something quick, and I'm going to be honest with you guys, and that's the reason that I lost the first new trade that I called. From this higher low to this higher high, right? This was a 61% level. This right here, I definitely, and I did take this buy, and I did call it for you guys, and we lost the trade. Right? And again, no strategy is bulletproof. You can have all the confluences aligned, the 1-hour time frame, everything aligns, and you still lose the trade. That's why you need proper risk at all times, right? So as you guys can see right here, sellers were in control, sellers were in control. I was not going to buy here because this was not a 50 or 61% retracement level. But the market did drop to this level right here, close to the 61% level, and also created this nice bullish engulfing right here. The bullish engulfing is going to be a green candlestick that is going to engulf the previous candlestick. As you can see, this engulf the previous red candlestick. The previous red candlestick, and this was my confirmation to get in. Yet again, I took this trade, I lost it, and I had no remorse because I was following a system, I was following the strategy, and this is the exact same way I was supposed to take this trade, right? You cannot feel bad if you lose a trade. I can feel bad if I follow the system and place the trade and I lose it, right? So never mind all this, right? So I called this Euro USD for you guys. We're in profit. You know, I was happy. Then it dumped to hit a stop loss below this higher low. I'm going to show you guys why. As you guys can see yet again, it did create that bullish engulfing. Never mind all this, because they called it somewhere down here. I called it the first time and we lost it, and they called it again and we made money off of it. Never mind all this. By just looking at this, right? Not this, right? As you can see, the market created a bullish engulfing, which means sellers were not selling anymore, buyers were coming in, and that's why we're in profit. And I'm going to scale down to the 1 hour to show you guys something real quick, right? We're on 1 hour time frame. If you zoom out around the 1 hour time frame, and guess what, guys, right? We did break the little 1 hour trend, right? Break the 1 hour trend, came back, created that higher low, small higher low, and you take it. And if you take a trade like this, and the trade goes against you, don't feel bad. You know what I'm saying? Because you have the 4-hour confluence and the 1 hour confluence and all that good stuff, right? So now let me go back to the 4-hour time frame again to show you guys something, right? I called it somewhere around this area, actually, and we're in profit and we lost it, right? So this is what we call liquidity, right? And this was probably used to for all we care about, I don't know, but this was a solid 10 out of 10 setup, and we lost it, but we made the money back probably times 2 actually, right? So we did lose that trade, and it dumped again all the way. Sellers took over again right here, and guess what? On the 4-hour time frame where they called the trade, guess what? Buyers took over right here. As you can see, this was another bullish engulfing that engulfed the previous red candlestick. And guess what, guys? This is the exact same thing that happened on the left. This is what I'm saying. You cannot feel bad if you lose a trade as long as you follow the system the the way you're supposed to follow it, right? As you guys can see right here, that green candlestick engulfed the previous red candlestick, which is the bullish engulfing, and Zay probably called it. Let me show you guys again. If you Zay scaled down to the 1 hour time frame, right? And 1 hour time frame, what Zay did, right? This is where you draw your trend line, right? The market is going to be bullish on the weekly and the daily. It's going to be bearish on the 4 hour and the 1 hour. That is very important, guys, right? The market will be bullish on the weekly and daily. It is going to be bearish on the 4 hour and the 1 hour, right? But guess what? We do not care about what the 4 hour and the 1 hour is doing. Right? This is where you get trapped and this is where you lose money, right? You have to trade with the overall trend, which is weekly and daily, right? So now on the 1 hour time frame, right? You grab your trend, right? Right here, and this is, man, Zay, shout out to you again, bro, right? As you guys can see right here, right? Downtrend, 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 lower highs and lower lows and so on. But there was a break of the 1 hour trend. This is literally the ultimate confirmation that you need to make money. And I'm going to look at Jen again. Make sure Jen is doing it, right? A break of the 1 hour trend, retest of the 1 hour trend. This is a small higher low. This is what I'm saying, guys. You can easily intraday. If you don't feel like holding the trade for a couple of days to catch the 0%, you can easily intraday. Place your fib from here to there, get in here, probably 50%, and get out somewhere around here. You can easily do that. As long as you know you're trading with the daily trend, you're good, right? So there was a break of the 1 hour trend retest, created the higher low, right? Zay called it, and the market decided to go all the way up, not to the daily 0% yet. It's probably going to go for the 0%. And Zay told you guys to update your stop loss at 100 pips profit somewhere around this area, I believe. The market dumped to actually kick us out, and then we still made money off of it, right? So that's exactly how the strategy works, guys, right? I'm going to show you guys something as well. Once you know the daily is bullish, the weekly is bullish, guess what? You can still intrade it. This is why I wanted to call this intraday trade. Intraday means, guys, probably going to hold it for a few hours, right? So this is why I wanted to call this intraday trade for you guys. Let me get rid of the fib. I'm going to show you guys something. Just by knowing the daily is bullish and you're looking for buys, and this is why I said earlier, it's already going to put you in the top 90%. Trust me when I say this. Watch this, right? But now if you zoom all the way in, this is where we at. Right? 1 hour time frame. Right? 1 hour time frame. Let me do this. Kind of looks different. Oh, perfect. This is where we at. Right? Remember, guys, all this work placed on the daily, right? All those rectangle boxes. But guess what? We're on the 1 hour time frame. I'm going to show you guys how to intraday instead of holding to the 0% on a daily. For some of you guys who probably don't like holding, right? You do this, grab your trend right here, right? Right? There was a break of the trend on the 1 hour, right? Guess what? You can easily place your fib on the 1 hour time frame and look for the 50% for you to make money. But you have to make sure that the daily and the weekly is bullish, or you know the daily and the weekly is bullish, right? And you draw your little trend on the 1 hour time frame, and you go to grab your fib, right? This is how you intraday, right? Place your fib from now. This becomes a low, not a higher low. This is a higher low daily, but this is a low on the 1 hour, right? So what I'm trying to show you guys is that you can place a fib inside of another fib. You can place a daily fib. You can place a 1 hour fib as well. Depends if you're trying to hold. If you're trying to hold for a few days or swing trade and catch the overall move, that's why I trade. Or it depends if you're trying to hold for a few hours up to a day, right? So now this becomes a low, right? And this becomes a high, right? Not a higher low, not a higher high, a low and a high inside of the 1 hour. But, right, if you zoom all the way out on the daily, you have, let me zoom in, you have higher lows, higher highs, and so on and so on. But I'm placing higher lows and higher highs inside of a major high low and a higher high. Guys, it gets very advanced. This is where you gotta do your stuff, right? So now, and Zay literally had the exact same setup as well that I sent you guys this morning, right? And now you have this low, you have this high. Sorry, it was like this before the move happened, right? All you have to do again is grab your fib, right? Place it from the low to the high. Guess what, guys? Right? Market went all the way down, right? To create a high high low at the 50% level and also at the 200 moving average as well, right? As you can see, the market was trending below. I'll probably make a special video on how to use the exponential moving average, which is the bull line. As you can see, the market was, touched down on the bull line, touched down, and finally went above the 200 exponential moving average, came back not only to retest the 200 exponential moving average, but to also create a small higher low at the 50% level. This is how you intraday, right? This would have taken you, right, a few hours, not even a day, for you to pretty much smash your TP, right? So this is why I actually wanted to call this trade for you guys this morning. I missed it, right? You get in here, stop loss, make sure it's a 1-to-3 restore ratio, and TP all the way up there, and you will smash TP, right? That's pretty much how it goes. This is how you intraday inside of a major swing trade.
And can I just add something when you're intraday trading, because you'll see Zay call them, don't change your lot size. So whatever lot size you would normally trade with, keep the same lot size, but so if you're trading $1 a pips or you're using a 0.1, use that same lot size but with a lower pip count. So instead of risking $50, you'll be risking $30. Don't up your lot size to be trading $50, right?
Where is it? Should be plugged.
It's the first one.
Guys, does that make sense though, right? Because some of you guys might not like swing trading, and some of you guys probably want to trade for like a few hours and get out. This is much better than scalping. The thing is, you can swing, you can intraday, but as long as you intraday based on the higher time frame, if that makes sense. But if you just kind of skip the daily and the weekly and try to intraday on the 1 hour time frame, because once you skip the weekly and the daily, it's so easy to lose a trade because you do not know what the market is actually doing. If it is an actual uptrend or an actual downtrend, right? So as long as you know the overall trend on the daily and weekly, you can easily scale to the 1 hour time frame and still look for buys, by listing small higher lows, small higher highs on the 1 hour time frame. Use your fib, get in, and you probably get out. Probably would have taken you like 6-7 hours to pretty much smash TP, right? Any questions? It's very advanced stuff, guys, right? Feel free to ask me anything. Now is the time to ask questions.
Your RSI is at 13, but I thought it should be at 14.
To be honest, I don't even use the RSI anymore. It's just there. Like I don't use the RSI much. Yeah. Guys, feel free to ask me anything.
Mino uses caffeine.
Huh?
Mino uses caffeine.
Absolutely. Yeah. So 99.9% of the time, if the daily and weekly is bullish, if you scale down to the 1 hour on the 4 hour time frame, you're definitely going to see the opposite, which is lower lows and lower highs, which is going to be bearish. And what you need to do is literally draw your trend on the 1 hour time frame, and you wait for a break and a retest. Not a break and a retest. You wait for a break of the downtrend, right? And then you're going to also wait for the market to actually create the opposite structure of the 1 hour downtrend, which is going to be a higher low. And you know, as you can see right here, right, that's the opposite of what it was creating on the left, right? Lower lows and lower highs. Decided to create a higher low. You get in and you get out, right? What I'm saying is, you can still intraday, right? I'm not saying not to intraday, but you gotta be able to know when you intraday is like you're going to do like a deeper technical analysis, because you're going to not only do the daily high lows and higher highs, you're also going to have to do the 1 hour higher lows and higher highs as well, right? Does that make sense?
So again, like I said, if we're swing trading this, is in again we'll look for entry as well. But again, we see a opportunity where we can interject.
Yeah.
Would you call it interject same way even though we're swing trading?
Me, to be honest, I like, going for the overall. I like, I don't like 10 pips, 20 pips. You know what I mean? I like going for the overall TP at the daily 0%. Because you gotta remember, this is a 1 hour 0%. What you can do is, to be honest, for example, let's say if you're supposed to use 0.10 lot size, right? You can split your entry, right? 0.05, 0.05. One 0.05 will be at the 1 hour 0%. The other 0.05 will be at daily 0%. And I did the exact same thing for Bitcoin. I told you guys, hey, split your lot size in two, right? One of them will be at 700 pips, I believe. That is day trade. That was a day trade for BTC, which means it might take a couple of days or so for it to smash TP. BTC actually moves a lot on Saturdays. And then the other trade will be for guys who actually, swing trade, who actually want to hold. Because you guys gotta realize, right? Let me place it this way, and I want you guys to be completely honest with yourself, right? If you've been trading for a while, right? How many of you guys have added $1,000 in your account, and the account is currently sitting at $3,000 right now? This is some real stuff I'm going to show you guys, right? Right? None of you guys, right? Right? And how many of you guys have placed a lot of trades and still didn't gain a 20% return? A lot of you guys have placed a lot of trades with the $1,000 account, right? And it's probably down now, or probably up to $300, right? That's what day trading is, right?
I also want to ask a question.
Go ahead.
How many of you guys have closed trades out early because of profit and didn't let it ride?
I do it left side. I think I always want to ride.
Okay.
I want to see how it played out.
So I'm going to show you guys something. And gold, when gold dropped, gold actually dropped, I think 8% in one day. That was like something that happened over the last 10 years, I believe. When gold dropped, and I was telling you guys, hey, it's a matter of time before, it's not a matter of if, it's a matter of when gold goes back to all-time high. Not only did gold went for all-time high, he actually created like 10 all-time highs since then, right? And I'm sure many of you guys have placed probably like 200-300 trades since that was like 6 months ago or 4 or 5 months ago. Right? I'm sure many of you guys have placed.
I remember that. I remember that day.
Exactly, we were there.
Exact date.
Exactly.
It was October 16, 17.
There we go. From October to January, and I can guarantee you guys probably placed over 80 trades or 60 trades if you guys were trading on your own, and you still did not make what gold could have given you. This is what I mean, right? Let's say if you have gotten on gold at 0.05 lot size, let's say if you had 1K in your account, you know how much money you would have made by just off that one trade? 5. Yeah, take that in. Right, that's the power of swing trading, guys, right? This is why it's so easy for me to make money, because I have a different mindset when it comes to trading compared to most retail guys, right? Guys will place 40, 50 trades and be up $150. I'll place one trade and be up 5,000. And the thing is not even about the account size. You can say I have the same account size and I'll beat you by 200-300% because I'm patient. So get in a trade and let the trade plays out the way it's supposed to play out. It's not a matter of if, it's a matter of when. And guess what? BTC did the exact same thing, right? They already dumped, and it's so early to make a lot of money off of BTC right now. Right? Some of you guys will take it at 0.01 lot size, and you're up $40, $50 and close it. And this is the one thing I was telling Ishmael. I mean, Ishmael went on a drive yesterday, right? So, let's say if you get in a trade at 0.01 lot size, right? You guys love saying profit is profit, which is true, but not all profit is profit, right? So let's say if you get in at 0.01 lot size, you made $40, which is about 400 pips, right? You're very happy, which is fine, you made profit, right? But once you close the trade, what's the next thing you're going to do?
Wait. We're gonna look for another one now.
You're going to look for another setup. Are you going to win the next setup?
Who knows?
Maybe. You see the mindset I'm trying to tell you guys, right? Once you close a trade, you're going to be forced to look for another setup to make more money. right?
You have to
But-
be patient. And
Exactly, but once, if you take a swing trade knowing that you'll make a 20% return at all-time high, not a matter of if, it's not gambling, it's a matter of when. It might be next month, it might be May, it might be, I don't know, right? But you know you'll make 200% return eventually. Why do you need to place so many other trades, right? You can take that trade and wait to make 200% return. Now, let's talk about, let's say if you have $100,000 in your, not prop firm, I'm talking about real personal life account, right? This is what Ron was saying as well. Once you have big capital, guys, I guarantee you'll be patient. The only reason you're not patient because you have $1,000 in your account, you're trying to take a lot of trades to grow your account to make money, right? But if you have big capital, if you know that you'll make 200% return of $100,000 in the next 3-4 months, I bet you'll wait. Right? That's the mindset to have, guys, right? You'll see guys taking probably 2,000 trades for the entire year and still being negative. And I take one trade and I'm already up 20%.
Does everyone know what a swing trade is?
Swing trade?
Yeah.
What's a swing trade?
You buy today, you sell in 2 weeks or
Or
3
months.
days.
Because to be honest, for the longest time, I didn't know until I talked to Mino and I seen him. So, Mino, why don't you describe to them how you swing trade?
So looking at gold out right now, there is nothing. This is what I'm not even in gold. There's nothing you can do right now on gold because guess what? Gold is way too late to buy it and it is very risky to sell it, right? So there's nothing up there. There's no support. There's nothing up there, right? So once you buy some, listen, your exit price is as crucial as your entry price, right? If you get in, you must know where you'll get out. Does that make sense? That's why we have the fib to tell us at the 0% you get out, right? But what I'm trying to tell you guys is that of that BTC trade alone, even if you have 1K in your account at all-time highs, you're making $2,000. Guys, you might think, oh, $2,000 in 3 months is nothing, but think about percentage-wise the return. That's a lot of money, right? That's a lot of money percentage-wise, right?
Can you go over what swing trading actually is, maybe?
Huh?
Go over what swing trading actually is, like what it is exactly.
I mean, I just did. I pretty much went over it. From the strategy that I just showed you guys, it's pretty much swing trading, right? For example, let's say if you got in here, right, at the even here, right here, that's the most recent trade that's it called, right? Let's say if you got in at the somewhere at the 61% level. Let me get rid of this real quick and do the daily now, right?
Can I explain something that you explained to me that I didn't understand that might help people?
Okay, go ahead.
Is that when you're swing trading, if you get in at a lower amount or lower time, like in the perfect entry,
Yeah.
what you're constantly doing is you're just readjusting your take profit to take profit too,
Yes.
and
Oh, yeah.
and you're bringing your whole trade up. So
Yeah.
you're securing profit, but you didn't close that trade because you're in it and it's still going up. So you're constantly readjusting your take profit.
So is that you're trading?
Yeah, it's called trailing.
So
yeah,
you're step trading. So when he says he's swing trading, he might have got in on this entry and said, okay, if it meets this, but oh, it's breaking that, I'm gonna go to TP2.
And also slow
Is that
stop loss.
And-
that take enter too late?
Mhm.
Like that wait and enter.
Yeah, entry price, guys, is literally everything, right? Because if entry price is trading, that's what trading is entry price. Because if you don't care about entry price, just buy and hold. You know what I mean? Because you can easily see gold's at all-time high right now, right? It is then impossible to trade it because there's the entry price is going to be trash, right? But if you do not care about entry price, do not trade. You can easily buy gold right now, and gold can easily drop like 20% based on your portfolio. But in the next 3, 4, 5 months, it is going to recover, right? But when you're trading, it doesn't matter if you're scalping, intraday, or day trading, or swing trading. Entry price is everything. That's how you make money, right? You make money by entering the market at the right time.
So when you know Bitcoin at one point was at 120 and you're entering at 88, you've got a large buffer, so you can take temporary trades, but then you're like, okay, it's still going up. You move your stop loss and your take profit, so you're not actually losing money. You're still securing capital. It's just you're stepping it up to the next step, right? Because you know that there's a huge gap, like Nino said. You know, the all-time highs up here and it's dropped down here and retraced. So there's a good possibility of it at least respecting certain zones.
Yeah. So it's all a mindset thing, guys. To be honest, you can easily place 40 trades and be up 5%, and place one trade and be up 20%. You know, I mean, it's completely up to you guys, but you have to think differently, because if you think like everybody else, you'll be part of the 97% of people who actually lose money in the market.
Like right now, the way I'm trading gold is that I wait for a retracement before I put it buy. Because right now you can put it buy because you think it's going up, but how gold works, once you put it buy, it's gonna react to your trade. It does that all the time.
Yeah.
Every time, yeah. So that's why I just wait and be patient until I see a retracement. That's when I put my buy. That's how I've been trading gold since.
And to be honest, guys, what he just mentioned is how you should be trading regardless. You always need to wait for that retracement.
You have to.
Even on currencies, guys, you need to wait for that retracement to give you the true vision of what the currency's doing.
Any questions, guys? Does that make sense, right? Hopefully you guys will be living here with a different mindset. It's easier to make 100% return with swing trading than to make the day trading. I can literally guarantee that, right? Because you have to realize, it is damn near impossible to beat the market. Like literally damn near impossible, right? So each time you actually hit TP, that's big. You know what I'm saying, right? So when you're trading on the lower time frame or scalping, right, and you're placing sell, the market is in an overall uptrend, is you betting against the market. Don't bet against the market. Trade with the market, right? And then the reason I go for the overall picture, right, and this is why I now probably want to start giving you guys 2 TPs, TP1 for day trade and TP2 for swing trade, but they're always going to be like past at least 1 to 3 1 ratio, right? But the easiest way to take both TPs, right, is by splitting your lot size. But do not get let's say if you're supposed to use 0.10 lot size, do not do 0.10 TP1, 0.10 TP2, right? So you'll be over leveraging, right? So split the 0.10 in half, 0.05 for TP1, 0.05 for TP2. So that way you'll be catching both day trades and also swing trades as well, right? So that's pretty much it. It's been a long session, and I appreciate you guys for taking the time on Thursday night to actually show up. Right? Like I said, I have so many things that I'm working on back in, and then as soon as I get comfortable with order flow and that good stuff, I'll be having sessions with you guys, right? So, appreciate you guys.
Yo, Mino.
2 weeks.
Yo, Mino. I gotta get going. See you.
Appreciate you guys for joining on Zoom as well. Zay, Oji, Dwayne.
So I used, I took
Hopefully you guys
one
can
trade
do
on